Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for July 17th to July 21st, 2017. Is the dollar done? That's the big question as we closed off the week. We closed off the week with terrible U.S. data. U.S. retail sales missed for a fifth month in a row. CPI essentially flat as a pancake. There is nothing fundamentally in the U.S. economy that justifies another rate hike for the rest of the year, and the market sold off accordingly, with Fed funds futures now pricing less than a 50% chance of a rate hike before December. So the pressure on dollar yen pretty significant, and the other anti-dollar trades, the euro dollar and the pound dollar, also exploded to the upside, especially the pound dollar. Quite interesting. In many ways, the calendar next week is going to be all non-dollar based. So let's just take a look at the calendar first, then we'll take a look at the levels, and I'll show you the charts as well. We start out essentially with a little bit of Australian data. Well, we'll get to the comp dollars in a second. But on the European side, it's UK data, which takes center stage on Tuesday with CPI data, PPI data, and then ZU data out of Germany. Then Wednesday we don't have anything going on. On Thursday, retail sales, a really critical component in UK data set, because the idea on the UK side is that the very, very high inflation rate and the slow, tepid wage growth is having a very difficult time on retail sales. We were actually bullish retail sales next week. Part of the reason maybe why the pound rallied, because the market certainly is not anticipating bad numbers or bad data, and the pound had the strongest gains today of any of the major currencies. So in some ways, maybe the market is looking for some sort of a rebound. Fundamentally, I'm still extremely bearish cable long term, but this seems to be the week where technicals broke out. I'm going to have to respect the technicals to the upside. So for now, cable is much more of a buy than it is a sell. And then, of course, Thursday, we also have the ECB meeting. And this is going to be very interesting, because if this is the meeting where Mario Draghi hints that they're going to taper sooner rather than later, should be bullish euro, and euro very much on path towards the 115 level. Let's take a look at the resistance levels and support levels, just to see where we're oriented ourselves this week. Euro still very much this 113, 115, but we're very, very close to that 115 level. A breakout above really opens up the run all the way up to 1650. We'll take a look at the long-term charts here, but that very, very important psychological level, if that's broken, opens up the floodgates to the upside. Dollar yen, on the other hand, is capped. In fact, you could make a very, very convincing argument that dollar yen has created a double top formation, and now the trend and trade is towards the 112s to the downside, as all of the expectation on the dollar side really comes out, and we don't have any real significant U.S. data next week to kind of counter trend that sentiment. And cable just blew out its levels today. And you have to respect that move quite a lot from a technical point of view. So now we're looking at this 32.50, which is the post-Brexit lows that is a very, very important range that needs to test as we go to the upside. Let's take a look at the charts here and get a closer look. So a euro, you can see this 115 has been a very key resist level. This has been, if you look at the longer term levels here, so this is basically 117 out of when we did a major turn to the downside and started a massive downtrend move all the way down to the 105s. A counter trend rally then again died out at around the 1600 level. So how much more upside do we have? We certainly have at least potentially 100 points, right? We really have to about 1650 as a possible resist point here. So euro does have more upside potential, especially if ECB comes in and remains relatively hawkish in its forward path. The data out of Europe continues to be quite good. Matter of fact, you can make a strong argument data out of Europe has been better than data out of the US, and that really puts the ECB on even par with the Fed, which creates a massive repricing. And remember, it doesn't matter what the absolute yields are, it's a matter of just relative direction of those yields. And if German bonds begin to pick up yield while the US Treasuries remain mired below that 230 level or below the 235 level on 10-year, that creates massive flow to the euro and to the upside here. Technically, we continue to look super good. This is essentially a classic upside trend. We're not even breaking. Look, we're not even breaking the lows. We're just basically consolidating, moving to the next level, consolidating, moving to the next level. So a break above the 1500 would maintain that pattern. and really puts us on a much more serious test of the 1600 level right over here. Dollar yen, on the other hand, complete disaster this week. We basically made a double top. You could, this is a weekly chart I'm actually looking at. I'm sorry, this was a weekly chart that I was showing you. On a dollar yen, I want to go to the daily chart to show you a little bit more granular look. Look at that, classic double top formation. We broke the lows here at the 1300. That now puts us on path towards at least a test of the 1200, which is a near-term support, and possibly, if we have a massive dollar negative sentiment, a reversal all the way down to the 110s. So we have a lower double top high, end on the close of the lows here, and a move potentially certainly to the 1200, maybe 1100 next week as the unwind in the dollar continues. And the reverse of that is this move in cable that blew past the 30, took out the 31s today. That's a super strong move in cable. And the thing about cable, though, you need to be very wary of. The big moves tend to just consolidate. So it's not a situation where I think we could have, I mean, it's possible that we could have a move to the 32s, but cable could spend the next 3 or 4 days just simply holding the 31s, 30s as a level. As long as, if you notice, it's kind of a signature pattern where you have a big breakout, a long term, and then a burst another 100, 150 points higher. It's quite possible we can go to 32.50 ultimately in this trend to the upside, but it's also quite possible we could just consolidate now between 31 and 30 for the first couple of days. A positive retail sales number this Wednesday certainly puts us onto the path of 32s into fresh highs. Let's go back to the weeklies here now and just take a look at the longer term charts. You can see just how powerful this move is. So now we're coming up against this very big resist point of the 3250s, 3300s. That's the next level. Essentially, if you look at it from a longer term point of view, we've cleared the 25 to 30 corridor. We're now in the 30 to 35 corridor. As long as 29 holds, essentially that 30 to 35 corridor is the new operating reality for cable to the upside, and you basically have to buy every dip that you see coming your way. That's how the majors are shaping up for next week. I wish you guys the best luck, the best of trading. Boris, over and out.